The trend is intact, and even though you can say that there are not too many good things which have happened in last couple of days, but the bulls in a sense have really muscled it up. On expected lines, frankly, if you ask me, uh, Nifty and benchmark indices are doing much better than what the broader market is doing. So there is a bout of short covering. Fresh commitment has come into the banking stocks, and the flows, which in a sense were slightly patchy, they've got cemented further. So the inertia in the market may have moved from mid and small cap stocks to large cap stocks in terms of outperformance. I think that is real. That is here to stay. For the sake of turning bearish, you should not be bearish. The best strategy in this market is that you want to stay with the trend and perhaps avoid making some costly mistakes. What are the costly mistakes? The costly mistakes are that if you chase some of the overbought names in the small and the mid cap space, when they will reverse, it will hurt you like it did on Tuesday. But by and large, I think the trend is intact. The mood is solid. You want to stay with the market and avoid costly mistakes.
Avoid costly mistakes, stay with the momentum, and right now the momentum seems to have shifted towards the large cap banks, large cap names rather, and it's the banking space that was rallying last week. It was the PSU banking index which was up a solid 7% in the week gone by, the best performing sector by a huge margin. In fact, for the last many weeks, months, and in fact year to date as well, we have seen it has been the massive outperformance coming in from the PSU banking space, of course on account of stronger recoveries that are expected and the fact that the asset quality has turned a lot healthy. But I also wanted to bring on board the valuation picture now, because that will tell you that the valuation, Nikunj, of all the public sector entities are now higher than the 5-year average, while if you look at the private banks, they're still cheaper than the 5-year averages that we have seen in terms of valuation. Tells you, if at all, if there is a room for private banks either to catch up, or do you think this rally in PSU banks will continue?
No, I think the rally in PSU banks will continue. I'll tell you why. What markets are not realizing is that you cannot compare last 5 years. Why? Because the historical number for PSU banks were very different than what the future reality would be. Banking is not like FMCG that it's a trend which you follow. PSU banks have gone through a lot of churn because of the cycle and because of the NPA issues which had hit them. So last 5 years, you can look in isolation and talk about, okay, last 5 years, valuations were X, now valuations are Y. I think the reason why PSU banks are outperforming is because they are cheap. B, they have a huge liability advantage. C, in terms of the way some of the large PSU banks, I'm referring to large PSU banks, SBI, BOB, the way they've also built up their technology platform and their retail franchise, I guess in the near term, you may say that the real outperformance in PSUs is here. So asset quality is healthy, valuations are strong, and even the recoveries have been very decent. You throw it up with the technical angle, and if you look at the technical aspect here, which is what the PSU banking index did last week, I guess technically it was again a very important week. So if you put everything together, the technical momentum, valuations, and the near-term tailwind for the sector per se, I think the outperformance is here. The outperformance is real. That's the sense I got from Mr. Khara also, that look, State Bank of India will grow. He's talking about a 3 to 5 year cycle. So I'm not saying that you get carried away, but you want to be with banks. Just because PSU banks have gone up, that does not make private banks look good. And just because PSU banks have not made money in the past does not mean they will not make money in the future. What do you want to avoid here? A small PSU banks. They don't have scale, they don't have reach, and they don't have a strong liability franchise. So what do you want to do? You want to be with large 3-4 PSU banks, and this trend in the near term and in the medium term, I think is real.
Okay, that's the cue coming in when it comes to PSUs. Nikunj, you didn't even wait a breath when Anisha asked you the question, so it seems that you're pretty confident about this rally continuing. But let's also talk about the global setup, and you had the US markets which wrapped up in the red on Friday's trading day. But what investors are closely watching out for, that's going to be what the Fed is going to do, perhaps hold interest rates steady, also getting a sense on the inflation trajectory here on. But that's the map out of the global indices last week. It was clearly the European markets, the FTSE, that managed to outperform. You also had our own markets, which were right up there. The Dow Jones pretty quiet, and the Nasdaq wrapped up the week lower by about 0.33%. It is going to be critical to map out all of that data. But Nikunj, just as we're watching what happened last week in terms of the overall FII sell number for our own markets, the sell figure, we have managed to be at par with the outperforming countries.
So, Avan, look, India is like the rising star, not the rising star, but the established star. Rising star, we were a couple of years ago, now we're the established star. Within that, if you look at the flows which Indian markets have attracted, they're not at par with what you would have said is very, very one-sided. Indian markets have benefited and other emerging markets have also benefited. 2022 was a year when flows were not great. 2023, the flows have come back. And in the month of September and late August, the flows actually have turned volatile. So I don't think from a market standpoint you could say that FIs are just buying everything and anything. Yes, there are a lot of block deals. Yes, there are multiple things which are happening in the IPO market. But in terms of a real precipitous flow, I think it's not there. It's very measured. So the appetite to buy into Indian stocks at any price, at any level, I think it is not insatiable. With this kind of positioning, the flows should have been insatiable. The point I'm trying to say is that I think the good news for us is that we are moving in line with global markets. The flows at best, you would say they are mixed. And it is not that because of flows, any kind of a bubble, any kind of an euphoria has happened, which is what we let's say saw in 2008 and even in 2014-15.